Hi, my name is Marcello Arrambide. I'm the founder of the Day Trading Academy. Today, I wanted to take you behind the scenes to give you some of the compelling reasons and the forces behind why the Day Trading Academy exists. As an academy that's been extremely successful and is still growing, it'd be really easy to go ahead and highlight all our successes. But what I really wanted to do is share with you a little bit of the DNA of all the people and backgrounds from around the world that we've helped to be able to have their financial freedom and what we can describe as the lifestyle, which is freedom. Where did my journey begin? I can't say that it's been an easy process, but I think that it's been very gratifying. I was born in Venezuela. Obviously, we had to escape that situation, and also I didn't have a father growing up, so that's something else that we had to escape. I was living in a 2-bedroom house with 2 families in Tampa, Florida. I had to work not necessarily for the things that I wanted, but the things that I needed. So by the age of 16, I was working 4 jobs. I left the high school early to be able to work, and obviously I had to go out and get what I needed, because otherwise, with the situation that we had at home, it wasn't really that easy. Why personal day trading? I remember when I was in high school that I would go up north to see my uncle in Washington, D.C. And he, since I didn't have a father in my life, he was a bit of a father figure. And I remember he would come home talking about how much money he made and how much money he lost and all these things that happened with the financial markets. And that's really what planted the seed of the stock market and being able to make a living doing this, because obviously it's very different than a 9-to-5. He would come home at certain times of the day or for lunch, whenever, and he would talk to me about how, what he did in the stock market at this company and that company. So that really is what kind of planted the seed in being able to how to do this. Why the Day Trading Academy? I remember this process of becoming consistent, and obviously the day trading world is a very close-knit kind of group, where obviously if one person sees success in a chat room, they want help so they can see success, etc., etc. So I remember that eventually I started helping other people to reach the consistency, and then there was a person that wanted to be a partner at a company. I was the person in charge of teaching everybody, and eventually it got to the point where this person was selling things that they shouldn't sell, that really wasn't helping people. They started treating people inside the company, including myself and others, in a very, very bad manner. So it showed a lot of character of that person in the company. So I decided to leave that company because I didn't want to be a part of that. One, because I didn't want to treat customers that way, because I went through that when I first started trading, and I didn't want to do that to somebody else. So I was traveling around the world doing my own thing. I have my travel blog, and there was a few traders from that previous company that I was a part of that found my travel blog. They reached out to me, they wanted me to help them become consistent, and that's really when the vision was created with Day Trading Academy. I made an agreement with them. I said, look, tell me how much you want to pay for the training. We'll decide that we can agree on, and then from there, my idea or my goal wasn't necessarily to just sell courses, right? My idea was to really create something that would allow people to change their life and have the financial freedom. And now, fast forward a few years, where we have traders from all over the world. Those first group of traders are now the ones that are teaching the next generation of traders. I think it's something that's really special, and it's been an amazing process, to be honest with you. And I honestly, a lot of the traders now in DTA I consider family, and I wouldn't have it any other way. It explains why the Day Trading Academy exists, and if any part of the video resonates with you, then I highly, highly recommend that you consider day trading as a lifestyle. And if you choose to take this path of financial independence and freedom, I sincerely ask you to consider the Day Trading Academy. I'll see you soon. you shouldn't focus so much on the money. Focus more on just learning and doing the right thing, because the money will come. What I always tell people too is everybody talks about like millions of dollars and things like that. Like I'm a super simple guy. I don't have a fancy watch. I don't drive a fancy car, because for me, it's not about having $1 million. It's about having just enough money to not worry about money.
Hello, everyone. My name is Dominic Marasigan, and this is an introductory futures trading webinar. Thank you for showing your interest in finding out more about futures and how we trade futures and how we specifically day trade futures. So before I start, let me get to this disclaimer and risk disclosure. So all information in this presentation is for educational purposes only. It's not an offer or recommendation to buy or sell futures, stocks, options, or Forex. We had to also post this disclaimer for the Securities and Exchange Commission of the Philippines, since we are registered with the SEC Philippines. The trading of futures contracts in the Philippines, as well as the rules of the SEC Philippines on futures trading, is currently suspended. Thus, the trading of futures contract is not allowed in a Philippine exchange. The futures contracts that's being taught by DTA Philippines through their training seminars are exclusively traded in the Chicago Mercantile Exchange, or CME, and are not traded, again, emphasize that, are not traded, or are these legally allowed to be traded in any Philippine exchange. And the risk disclaimer is the trading of futures contracts is highly technical and complex and depends on numerous and variable factors. Thus, any investor or trader of futures contracts, experienced or inexperienced, can potentially lose all or more than his or her initial investment. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. So basically saying, do not trade with money you cannot afford. And basically that is true for any type of investment, be it real estate, stocks, Forex, and so forth. Do not trade or do not invest any amount of money that you cannot afford to lose. Basically, that's what it is. So it not only pertains to futures trading, but also pertains to any type of investment, again, like in real estate and so forth. And here's a required risk disclaimer as well for the CFTC, which is the regulating body based in the US. It's a Commodity Futures Trading Commission. Again, they state futures trading has large potential risk as well as large potential rewards. Do not risk any amount of money that you can't afford to lose. Okay. Basically, that's what it is. So no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this webinar. And again, same thing. This is all for educational purposes only. Again, the CFTC Rule 4.41. There's no representation being made that any account will or is likely to achieve a profit or loss similar to those that is being presented in this webinar. Again, my name is Dominic Marasigan. I am the master trader of DTA Philippines. And basically, brief background about me. I was born here in the Philippines, Manila, and I left when I was 4 years old. I grew up in the States. I've been having had a full-time job in the States. I graduated I went back here in the Philippines to basically learn more about my culture. That's why I studied. My college years were spent in University of Santo Tomas, or UST. I graduated from there with an accounting degree, and after I graduated, I went back to the US. Because by the time I graduated, the People Power Revolution was still going on. instability in the government, instability in the economy, and so I decided to go back to the States. I returned back here in the Philippines permanently May of 2014. So that's where I'm at right now. I currently live here in the Philippines, and that's the reason why Marcello chose me to be a master trader. So, anyways, my trading career began in 2010. I had a full-time job. I was trading forex part-time, and I did that for 3 years. And I realized that I was not making consistent profits in forex. I delved into the binary options world, binary options, binary spreads, and so forth. However, I was trading those binary options in a regulated market in the US. It was called NADEX, NADEX, short for the acronym standing for North America if I can get that out of that word out of my mouth, is derivative exchange. So it's North America Derivative Exchange, or NADEX. They are the only regulated binary options exchange in the world. So I was doing that. I was basically with another firm called Binary Trade Group, and I was providing trade signals for all their subscribers. In fact, they were making money, and I just told the traders there, don't rely on me. You have to learn why I'm entering these trades. And that's where I began. Basically, my goal is to teach everyone how to make money on their own rather than relying on somebody else for them to make money on. So basically, the old adage, teach a man how to fish, and you'll teach him to fish for life, right? So that's what I intend to do. People who are very interested, serious interest in learning how to trade futures, you can definitely make money, uh, not only as a supplemental income, but also as a full-time trader. Okay, so I began trading E-mini futures in 2013. That's when I became a student of Day Trading Academy. I met Marcello and DTA back in Toronto, Canada. I did my due diligence on Day Trading Academy, and I saw a lot of positive reviews. And I spoke to, in fact, at that time, I spoke to Marcello by way of email, and he said, "Why don't you come and try it out?" And at that time, um, I did. I attended one of the first MTU classes, which is what they call Military Training University. And you'll see some pictures here later where I was there in Toronto. But anyways, when I started doing that, that's when I had my aha moment. I realized that the system that he was teaching is basically based on price action, and it was promising back then to make money on a consistent basis. Now, what I'm doing now is here. I'm now a master trader for Day Trading Academy Philippines. Marcello came out here in 2018, and at that time, it was, I think, September of 2018, and he realized that he did not realize I was living here in the Philippines until we met again. And when he found out that I was living here permanently here in the Philippines, he made the proposition or proposal that we start DTA Philippines here, because he requires a full-time trader that lives in the country. So I was basically living here in the Philippines, and that's why he decided to establish DTA Philippines. So I'm now the current master trader. Now, master traders, the way Marcello picks out master traders, the big thing is they have to be trading a live account. If they're not trading a live account, then they cannot be a master trader. Unlike as compared to these other trading schools, predominantly, I'm not saying all of them, predominantly most of the people who teach the trading are basically marketers. They're not they're not traders themselves. Okay. So that's one of the requirements to become a master trader for DTA. So here are the other master traders that are on the world. Of course, there's Marcello. Next is Jim. He is the oldest one. He started, so therefore this proves to everyone, or this proves that age nor sex does not matter in terms of learning futures trading. Jim started his career to be a full-time futures trader at the age of 61. He currently is still trading futures. In fact, we call him Superman. He's been doing it for 10 years now, so therefore that makes him, what, 71 years old. We have a MTU that's coming here in the Philippines scheduled. It was scheduled for March, but since the coronavirus came about, everything was grounded. So now it's been rescheduled to July. So Jim will be coming with Marcello to that MTU, as well as Nikolai, next person there, Nikolai. We call him the hitman. His strategy that he trades is basically swing trading, more like intraday swing trading. And there's myself, and you have James. He's a U.S. citizen. He basically was playing professional hockey in Norway. He started learning how to day trade E-mini futures. Then when he started learning, he started earning as a trader on a part-time basis more money than he was making as a professional hockey player. So he decided to retire from hockey. He went back to the US, and now he is one of the trader coaches, or the master traders, I should say, based in the US. And of course, there's those other ones based in Latin America, Colombia, and so forth. So here is our, should I say, our YouTube channel. It's called Day Trading Academy Philippines. You may look this up in YouTube and subscribe to it. I post my daily trades. You can see live trading 325 and so forth, 323. I try to post it daily. When the days I trade, I don't trade. I do trade every day, but it depends on what I'm trading. For example, if I'm doing swing trading, it's going to be more than 1 hour. It's going to be basically the whole day. So I would not want to record the whole day. Most of the trades here are usually what you call the scalping. We're done in 1 hour, right? And you also have Marcello there posting also the recaps, his weekly recaps, as well as information regarding, let's say, best job in the world, in the trading world is trading, and so forth, the pros and cons of trading futures, those informational tidbits, as well as his weekly recaps. Okay, so make sure you subscribe to Day Trading Academy Philippines on YouTube. And here's my aha moment. This is in Toronto, Canada. Again, I'm like you guys, or the students. I'm one of the students here. And basically, that's me basically asking Marcello a question. And this is when I found my aha moment, when I realized that the system he was trading is more based on price action. As you can see, there are some indicators there, but the indicators are basically used as training wheels to see training wheels on how to see price action. So that was my aha moment. So here's my question to you, all of you. What brought you here? Again, most of them would probably say, what want to know more about what futures are. But I think the bottom line is there's an opportunity to make supplemental income, correct? That's what most of you are wanting to find out what futures is and the opportunity it brings in terms of making supplemental income. So anyways, what do you think is more important, skills or money? Of course, predominantly all of you would probably say skills, which, I'm not saying it's right or wrong, but yeah, I would say it's correct. Because any employer, if you are an employee of an employer, they would look at what the how experienced you are, or the skills that you have acquired either through college or from previous jobs and so forth. What skills have you acquired? Because the more skills you have acquired, the more money you make, correct? Right. So the skills is a lot more important than money. So, like I said, your value to any employer is basically your how much skills you can bring to the company. I'll touch that subject later down this webinar. So, anyways, here's a brief history of what Day Trading Academy is about. Day Trading Academy was founded in 2010, and they've been training for nearly 17 years with traders in over 90 countries. Again, here in the Philippines, we just started back in officially started in 2019, last year, I believe in June. And so now we're planning to expand in Asia, where the Philippines will be used as the hub. Okay. Our traders are successful students themselves, like myself. I was a student of Day Trading Academy, and eventually became a master trader because I started trading consistently. So, like I said, most of our trading coaches and our master traders were successful students, were students of DTA. Marcello also runs or is a CEO. He's a co-founder of a US-based hedge fund called Speed Up Trader. And of that, he's already funded over $7 million to traders who are consistent. Yeah, you have to pass a test to get funded. So he's already funded over $7 million to these traders that are not only DTA students, but also traders who bring in their own system. So it's not only based on people from DTA. And again, we are the only academy with a funding opportunity. Again, it's a US-based hedge fund, not based in the Philippines, but it is based in the US, and you are funded, therefore, in US dollars. I can I think I'll mention that to you later in this webinar. The company's goal is to open global trading centers all over, and we are starting here in the Philippines, and with the Philippines here, especially here in BGC, will be the hub for Asia. How many of you are familiar with Investopedia? Basically, Investopedia is like the Wikipedia for investors. Investopedia basically viewed us, DTA, as one of the best trading schools online. In North America, DTA, we teach all our students online. As you can see here, Day Trading Academy teaches traders how to deal with a variety of market conditions in the futures space or futures industry, right? So DTA is one of the premier schools online that's teaching futures. So who is Marcello Arambidi? As you know, he is the CEO and founder of both DTA, Day Trading Academy, as well as Day Trading Academy Philippines, and also Speed Up Trader, which is the US-based hedge funds. He's been trading over for 18 years, and of those 18 years, he's been coaching students to become traders for nearly 16 years. When Machado was growing up, his father left the family, and therefore he was the sole breadwinner of his family. He dropped out of high school to basically work 4 jobs to support his family. So he had no time to really go to school because he was supporting his family. But when he became successful in trading, he was making money in trading. He went back and went to school at the Wharton School of Business at the University of Pennsylvania, which is one of the top Ivy League schools in the US. So now he got his degree from there. So what's in it for you? This webinar, what's in it for you? Well, we're going to show you how futures trading is a great diversification and can be simpler, or should I say, can be easier than Forex. How many of you are current traders right now, either stock traders or Forex traders or some binary options traders? Basically, you should consider this as more of a diversification, okay? I'm not telling you to stop whatever you're trading. Is just basically diversify. Don't put all your eggs in one basket, as the old adage goes, right? So why is futures trading the best market for retail traders? Retail traders are like you and I. We have a limited amount of money that we can invest, or should I say, not limited, but a small amount of money that we invest as compared to institutional traders. Institutional traders are the banks, the hedge funds. They have over millions, billions, and trillions of dollars that they can trade to, in which they move the markets, right? And also, what we're going to be doing in this webinar is also we'll be introducing the tick charts. That's how we trade our system, not on candlestick charts. Now, those of you who are new, who have no idea what I'm talking about, I'll explain to that later. But those of you who have experience, candlesticks charts are based on time-based charts, right? Either 5-minute, 10-minute, 15-minute, so forth. Well, tick charts are based on transaction-based, okay? And I'll show you what the difference between the candlestick charts and the tick charts and how it is more of an advantage as a trader to use tick charts. And also, I'll introduce to you how our powerful trading strategy is, the Congressive system. I'll briefly touch on that. And also the potential of you becoming successful trader coach or master trader and possibly join DTA Philippines. Like I said, I'm expanding here in the Philippines, and we're looking for good, consistent traders who can also teach other students on how to trade. So we're also looking for trader coaches as well once you become a consistent trader. So basic question is that's why most of you are here in this webinar. What is a futures contract? So basically, initially a futures contract was a contract to receive a physical product in the future. That physical product would be considered a commodity, such as gold, oil, corn, coffee, and so forth, right? So that was a physical. You're basically acquiring a physical product in the future. How we do it now, how we trade this is not based on the acquiring of a physical product. How we trade futures contract now is based on the speculation of financial instruments. For example, we use a stock index futures, more specifically, the S&P 500 of the U.S. Stock exchange, right, or stock index, because there's several types of stock indices in the U.S. There's the S&P 500, NASDAQ, Dow, and the Russell 2000. Those are the indices in the U.S. stock market. Okay, we trade on the S&P 500. So what exactly is the S&P 500? S&P stands for Standard and Poor's. Okay, 500 stands for the top 500 or blue chip companies in the U.S. that can range from Amazon. You have Amazon, Facebook, all the top companies, eBay, what else? All the top companies, like I said, those are S&P 500. It's very comparable to the blue chip companies here in the Philippine Stock Exchange. I believe there's 30 of them, right? There's Jollibee, there's Ayala, right? Morocco, and so forth, right? Those are your blue chip companies. So the S&P 500 is the U.S. top 500 blue chip companies. We just trade on the index, not any individual stock itself. The index. We speculate on the movement of the price in the S&P 500 index. So here's a more simplified illustration of what a futures contract is. So you see Juan the farmer here. He basically plants and farms coffee beans. Once he harvests those coffee beans, he sells it to his number one customer, which is most likely Starbucks. So Starbucks, he sells those coffee beans at a price of 500 pesos per kilo, right? And so what happens is what usually happens is that Starbucks would usually do their financial analysis. So they're speculating that the price of coffee beans will be going up in the near future, let's say by next year. So rather than paying that higher price, right, Starbucks would settle on paying their current price of 500 pesos per kilo, and they want to lock it in at that price. So they would go back to Juan the farmer and propose this futures contract, telling Juan, can we do a contract for at least 2 or 3? This doesn't matter how long the contract is for. It's basically a future date. So let's say for maybe the next 2 years, we freeze on this fixed price of 500 pesos per kilo. One, the farmer would speculate and basically think about it and say, you know what, I can't really predict the extreme weather patterns that's going on right now. Maybe next year I might be in a drought, flood or something, but that's going to really fluctuate the price. So he says, okay, so I'll settle with 500 pesos per kilo, because who knows, like there might be an abundant supply of coffee in the next few years, and the price of coffee then will start going down. So he would say, yes, okay, I'll agree to 500 pesos per kilo for the next 2 years, or any amount or specified future time that they want to agree on. Okay, that's what a futures contract is in its basic, simplistic form, I should say. Okay, so it's a specific price for a specific future or number of years, specific time in the future, be it 1 year, 2 years, 3 years, 6 months, 3 months, or whatever they agree on. Okay. So what is this? This is called the pit. This is in Chicago, and this is where the futures contracts was being traded. It's called the CME. So the CME, this is founded in 1997. It's called the Chicago Mercantile Exchange. I lived in Chicago. In fact, we call that the Merc for short. So the CME is the largest financial exchange company in the world, and that's where the futures is traded on CME. You can see here in this illustration, this picture, I should say, this is the pit. There's no longer a pit there now. Everything's done by electronic online. That's why it's called the E as an E-mini futures, because it stands for electronic trading. So now all the futures contracts are done electronically online. Before they were basically doing all the trading in the pit. This is your pit right here. You see the different colors or jackets that the traders are wearing? Those represented individual, or they represented brokers. So each color represented a broker. Okay. That was, I think, they stopped doing the pit around 2005 or 2006, somewhere about there. So everything now is done online. So what are E-mini futures? Again, like I said, it's futures contracts based on a financial product instead of a physical product. So therefore, when we trade, we are not acquiring any physical products. We are speculating on the price, more specifically on the stock indices. For example, S&P 500. It can also be on the speculation of the price of a particular currency, for example, the euro, or the British pound, or the Japanese yen. We also have futures or currency futures rather than forex. That would be more, should I say, more stable since it's regulated. Okay. Again, we're more accessible. E-mini futures are more accessible to smaller traders, to the retail traders like ourselves. So it's only 1/5 the size of a futures contract. Currently, the size of a futures contract right now, the price closed on Friday at 2480.25, right? So you take the market value, which is 2480.25, times that by $250. So the amount of a regular sized futures contract is $620,000 thereabouts. So you would take 1/5 of that. That's the value of a E-mini futures, which is 124,000. That's the size of a E-mini futures contract. However, you don't need that amount of money to basically trade E-mini futures, because it's a highly leveraged, should I say, leveraged market. So therefore, you can trade with a very minimal amount and make money. Now it says here how we make money is basically on the value of each incremental move, which we call a tick. I'll mention to you what a tick is later, but our tick value that we trade on the S&P 500, or ES for short, ES meaning S&P 500, is $12.50 per tick. Okay, remember that. And also the E-mini S&P 500, or the ES, is the most traded market by retail traders in the world. They average around 2 million contracts per day, just on the S&P 500 or the ES. Now here's an example of what we call the Superdome, or what we call this as depth of market. This is your price ladder right here. Then you have the number of sellers, you can see here, number of sellers, and you have the number of buyers at each price. That's why it's very transparent. In the Forex market, you don't see this. The only thing you see is the price. That's why you can see the number of buyers as well as the number of sellers at each particular price. That's called the volume, right? You don't see that in Forex. That's why Forex is not as transparent as it might seem. So anyways, here's what we call about incremental movements. So you see at the current, this yellow right here, this is an example. This is the current price at 31.19. Each move from 31.19 to 31.19.25 is one increment. It can also go down. It can go down to 31.18.75, but you can see one incremental movement is what? 25 cents. So each incremental movement is one tick. One tick, like I said before, was what? $12.50. So each movement here is $12.50. Therefore, a $1 movement from 31.19 to 31.20 or 31.18 is composed of how many ticks? You have 1, 2, 3, 4, right? 1, 2, 3, 4. 4 ticks. 4 ticks times what? 12.50 is what? $50, right? So $1 movement equals $50 in profit. Again, $1 movement equals $50 in profit. So your leverage is what? Leverage equals, sorry about the pen, equals 50 to 1. So every $1 movement equals $50 in profit. Leverage. Therefore, the leverage is translated to 50 to 1. Clear? So again, each increment is $12.50, right? So therefore, $2 in movement from 31.19 to 19.21, that's $2 in movement, right? Equals how much in profit? $100. Now, how would you like to make that consistently? At least $50 a day, at least. If you can do that on a consistent basis, that'd be a very good, I would consider that very good supplemental income, right? Our system, Conversa system, teaches you how to be consistent. Let me see if I can erase this. Yeah. So after that, here is let me get all this out here. Typical tick chart. Just erase all this, sorry. So here's a tick chart. This is based on 610 transactions, or 610 tick chart, as you can see on this. right here. See the 600 tick chart? That's what right here. That means 610 transactions per bar. So each bar here is composed of 610 transactions, right? So when 610 transactions are done, it would close that bar and create another bar. And then it would count down again, 610 transactions, then close that out, then create another bar and so forth. That's how you get each bar movement there, each tick chart, or that's be each bar on here, okay? As compared to a candlestick chart. These are candlestick chart. This is based basically on time based, right? So meaning time based, it can range from either 1 minute, 5 minute, 15 minute, 30 minutes, so forth. It's time based. So for example, in this example right here, this is a 5 minute candlestick chart. So each bar closes every 5 minutes and would create another one. Okay, so that's why it's candlestick, it's time based, wherein our transaction based or tick chart here is composed of the number of transactions. As you can see here, this is what we call, maybe at this time right here is around 15 minutes, I believe, right here circled here. Within the same time frame, this is how many more we have. You see, you have more opportunities to enter trades. For example, there's you can sell here, you can buy here, and so forth. You have more opportunities to enter a trade as compared to a time-based chart. That's why we use that. So here are the different E-mini markets or financial instruments. Okay, so you have the 6E, which is the euro. That's a euro. It's more like spot forex. Those of you who are currently forex traders, 6E is the euro. We also have the 6B, which is the British pound, the 6J, which is the Japanese yen, and so forth. And we have the 6A, which is the Australian dollar, and so forth. So anyways, you have the 6E, which is the euro, right? So it's the tick value for each particular instrument varies. From the 6E is $12.50. Crude oil is $10 per tick. DAX, which is the German stock index, is 12 euros and 50 cents. ES, which when we trade, that's what we trade on, just that particular market, is $12.50 per tick. Gold is $10 per tick. NASDAQ is another indice of the US. It's $5 per tick. The Russell 2000 is $10. And I don't know why I have NA here. That should be $5 as well, which is the Dow Jones. Okay. So those of you, once you learn our system and decide to trade live, these are the funding requirements. The opening account balances for the E-mini futures is 1,000. And I'll talk to you about what micro futures are. Micro futures, you need at least between $100 to $400 based on what broker you use. Where in the E-mini futures, you need at least $1,000, but I would recommend for a beginner to start between $1,500 to $2,500. The commissions based on the broker that you use. I use a NinjaTrader. It's basically $3.68 per trade. That's what round trip means. It's per trade. Same thing with micro. It is 82 cents, but with the broker that I use, I think it's 62 cents per trade on the micro E-minis. The speed up trader funded accounts starting at $120. So this is what I'm talking about. I mentioned to you before what Marcello owns a hedge fund, and the hedge fund is called Speed Up Trader. That what Speed Up Trader does is basically they take consistent traders who have basically trade a consistent system where they're consistently profitable. If they don't have enough money to start or trade a live account, then Speed Up Trader will fund you anywhere from a minimum of $25,000 to $250,000, right? But you have to pass a test, just one single test. Once you pass that test, then you are then funded. But you have to pay that test for the $25,000 account. The test costs $120. and so forth. The $50,000 account costs $150, right? So of that, basically, it's U.S. based. You're funded in dollars, and the first $7,000 you make in profit, you keep 100%, and anything above the 7,000, you keep 80%. So that's for people who don't have enough money to trade on a live account. Therefore, they'd rather be funded. We call them prop traders or proprietary traders. Okay. So anyways, here is a typical chart of the fees and the commissions. Now this is NinjaTrader. I use NinjaTrader. I'm not. That's my personal preference. We have no, we have no affiliation. We don't derive any commissions from any particular broker. We merely teach. But this is basically what I'm showing you, what type of features, instruments there are. We have, like I said, the E-mini S&P 500. You also have the micro E-mini S&P 500, as well as the NASDAQ, the Russell, and so forth. There's also Bitcoin futures. It's a little too expensive for me to trade because you need a margin of, oops, let's go back to that. You need to have a margin of at least $40,000, as you can see right there, right here. You need a margin of at least 40,000 there, right? Whereas what we trade right now, that right here, which is and I have, depending, this is your commissions, and your margin is only 500. I'll explain to that later what a margin is. So anyways, this is 189. It can range from either 189 to 249, meaning multiply that to be a complete trade. This is just one leg. One leg meaning once you enter, you need to get out of a trade. So therefore, you multiply this times 2. So it's like 189 times 2 equals 378 per trade. Okay, those are the commissions. Here are the commissions for the micro E-minis, and that's right here. But since I trade that also, I think it's lower now. I think it's, rather than 82 cents, it's 62 cents per trade. And the intraday margin is $50. And your other instruments, you have the cattle, hogs or pigs. They have the cattle, the feeder cattle and the live cattle. You have here the currency futures: the Australian dollar, British pound, Canadian dollar, the euro, the Japanese yen, the Mexican peso, the New Zealand, and so forth. So those of you who are forex traders, they can actually trade currency futures. They are the price is based on spot forex, right? So in fact, these are a lot more stable because they are regulated. Okay, let me get this out of here. And so now in terms of margin, this is what I'm talking about, margin. Let me see if I can get a black one here. So let me see if I can get another one here. Hold on. So in terms of margin, what I'm talking about is this. Here are the margin requirements. So here is a margin requirement. For example, I showed you for a regular E-mini. Here's the when we talk about the new micro E-mini features. This was introduced in 2019 of May, right, of last year. And the reason it was introduced was because it was basically competing with the forex traders. Now you can open an account to trade for as little as anywhere from $100 to $400 to open a live account. However, this is 1/10 the size of an E-mini futures, right? So therefore, remember I said $12.50. That's the regular E-mini, $12.50 per tick. Wherein the micro E-mini is basically 1/10 the size, meaning $1.25 per tick, as compared to $12.50 per tick on the E-mini. Therefore, you have less risk, and therefore that's why they can open an account with a lesser amount of money. So now when I talk about the $50 margin requirement, what is a margin? So let me explain further what a margin is as compared to Forex. So in margins, for example, let's say you open an account using let's say the micro E-mini futures, right? We open an account of $400, right? That's how much we invest, right? So we enter a trade. Once you enter a trade, it says here, margin requirement. Once you enter a trade, they subtract that $50 from your balance, right? So now your trading power is now reduced to $350. Again, excuse my writing here, okay? So now you enter a trade, you get out of a trade, and you made a profit of $10, okay? So your profit is $10 profit. And it's like a 6-year-old writing. $10, so now you have what, $360, right? So now you see this margin that was taken out temporarily. Now it gets added back to your balance once you complete the trade. So now your balance now is $410. See, that's how margin is used. Basically, the margin requirement is basically the end. You can relate it to this. It's analogous to an entry fee just to enter the exchange to trade. So basically, that's what it is. That's what a margin requirement is. Basically, an entry fee to enter the market to trade. And that's what it is. Now, for the regular E-mini futures, the margin requirement is $500. That you know, as you saw, like I showed you before in that other one. Hold on. I think I'll show you here what I'm talking about. Right here, I showed you right here. See this? These are the intraday margins, meaning day trading margins. 500, 500, 500. Those are the margins. Okay. So we talked about the micro. So let's talk about the differences between the stocks, forex, and E-mini futures. Again, in the stock market, back in 10 years ago, the stock market was very efficient, but now it is now inefficient, erratic, and more complex than ever in history. The reason it's more complex is being highly manipulated. Yes, the stock market is manipulated, even though it's regulated, but it is being manipulated. For example, the financial war that the U.S. and China were having um, drove the markets either up or down depending on what President Trump was tweeting. Once he tweets something, the market is either going to go up or it's going to go down depending on whatever he tweets. That's how it's manipulated, right? It's so manipulated nowadays. And what else? Same thing here in the Philippine Stock Exchange. It's been manipulated because not only but manipulated by insider trading, right? So we have to understand the structure, the behavior, understand the manipulation of what's going on in the market in order to be successful, right? So the best markets to trade right now, which I would say it's either E-mini futures or forex. However, there's a big advantage, as you may, there's a big advantage in terms of futures, right? The reason being is, I'll show you in a few here, but in terms of forex, forex is the largest market in the world. That market is around $5.7 trillion, right? Since it's the biggest one, unfortunately, it's almost the most manipulated market as well. Whereas, like I said, the S&P 500, that's just one instrument, right? Whereas Forex, that 5.7 is the whole market of all the currencies, right? Of all the currencies, how many, I don't know how many currencies there are in the world, but that's basically the 1.5.7 trillion. The E-mini ES is basically just one instrument, the S&P 500. It's the most traded market in the world by retail traders. It's 2 million contracts daily. Like I said, that's only one instrument. So what I said about Forex being the largest market and the most manipulated, you can see in this article here from CNBC. This was, as you can see, is dated May 16th of last year, 2019. Barclays, Citigroup, and JP Morgan were among the banks fined $1.2 billion for rigging the price of Forex. So 1.2 billion to them, they admitted that they're guilty. As you can see here, yeah, here it says here they entered a guilty plea because they were caught. Right here, entered a guilty plea, right? But to them, 1.2 billion is nothing because they're making so much money in manipulating that price that to them is nothing. That's why they get caught several times a year, not a year, but several times, and they always end up paying what, a fee or a fine. And again, they were fined 1.2 billion, and basically they paid it because they can afford it because they're making much more than 1.2 billion dollars in that market. Here's another article right here from CNN Money. HSBC got fined over 100 million for cheating forex clients. Again, forex is the biggest market, but at the same time, they are being manipulated by what, the institutionals, institutional traders, the banks, hedge funds, very manipulated. Whereas in futures, it's highly regulated by the CFTC. Okay, so here are the advantages and disadvantages of stocks, futures, and forex. In futures, you have a low cost of getting started. You can start as, like I said, depending what you want to trade, either micro e-minis or the e-mini itself. Forex as well, you can start as low as $50 to $100 to trade forex. Large number of stocks, that's the advantage of being in the stock market, because being in the stock market, you have a wide choice of stocks to choose from, but you have to choose wisely. You have to do your own research, correct? That's why there's a lot of public information available for the stocks, right? Same thing with futures. There's public information as well as forex, but there's a lot more information on stocks. Low prep time before you trade. For me, before I enter a trade, I usually do a 5-minute prep time. Just want to make sure where the market is headed and so forth, where the levels are and so forth. For me, it's 5 minutes. Whereas forex traders, usually takes, when I was a forex trader, it took me uh, close to 1 hour, because I would basically scan at other instruments, because you're not only looking at one instrument, you're looking at several. For example, there is 26 major currency pairs. So you're looking at least 26 charts. So therefore, you have to scan where the best possible trade would occur. Again, that for me, that would take around 1 hour. Okay. But for futures, what I do right now, it only takes me 5 minutes. High leverage. I mentioned to you the leverage. Remember, $1 movement in futures, and especially I'm talking about the ES, just the ES. So $1 movement in the ES equates to $50 in profit. That's your leverage. Where in Forex, you have anywhere, depending on the broker you use, you have anywhere from 100 to 1 to 500 to 1. Now, this is what leverage is. Explain this right here. So basically, if you have $100 to invest on Forex, basically the broker gives you, let's say, 100 to 1. So therefore, your trading power is basically as big as $10,000. That's what leverage is. Okay. So with that, let's say you trade with $100, you lose that $100. You not only lose $100, but you also, since you tapped into the leverage, you may owe a debt, because basically that using the leverage is basically using a loan, a $10,000 loan. So whatever amount that you thought you lost with $100, you also have a debt, whatever the loan that they gave you, plus interest. So usually the broker would tell you, well, you blew that 100, no, fund in another $100 and see if you can get it back. So you would fund another $100, therefore you would incur another loan because you're tapping into that leverage. Where in futures, when you use the leverage, it's already built into the market. Therefore, there is no loan, none whatsoever. Like I showed you in the ladder, right? When there's a dollar movement, there you make $50 for every $1 movement, right? where in Forex, it's more of a loan. In futures, it's not a loan. Okay. Here are more some advantages. Easy to learn, yes, futures and Forex. Stocks, you need to have more information. It's not merely just, it's hard to learn. You have to know about the company financials. You have to know how to analyze financial statements of companies and so forth. Now, zero sum game, that's an advantage. What we mean by zero sum game is basically when a trader loses, there has to be a corresponding winner. You can't have all traders losing money. If you lose money, you basically trade getting it from another. If you're losing money, you basically giving that money you lost to another trader who won. So basically, that's what it is. There has to be if you're selling at a particular price, there is a corresponding buyer who's basically taking your trade. That's what we mean by zero sum game, meaning there are winners and losers, of which winners are taking money from losers. It's not where everyone loses at one point. Okay, that's what a zero sum game is. And goes with the futures as well as stocks. No sell restrictions, meaning you cannot sell. Again, we can make money in futures. We can make money when the market is going up or when the market is going down. In fact, we make more money when the market is going down. Same with Forex. You make money when either the price of a particular currency pair is going down, you make money. Where in Forex, you can't do that. You have to own the stock to sell it, right? You can't just sell the stock without owning it. So there are some sell restrictions. Where in Forex and futures, you're not buying a physical asset. You're just speculating on the price. Therefore, there's no sell restrictions. You can sell and make money when the price is going down. The disadvantages of between these three. First of all, in terms of stocks, the major disadvantage is you have to do a lot of research. And that's why most investors in stocks, where do they invest in? Where do they put their investment in? In stockbrokers, because the stockbrokers are the ones who are doing the research for the investors, correct? And also disadvantage in stocks is basically you cannot, like I said before, you cannot short sell, you cannot sell short a stock that you do not own. Even though you own a stock, you still have some sell restrictions. You cannot sell it, correct? There is market manipulation going all over in each of the markets, but more so in Forex. As you can see, there's a lot of fines that get caught in terms of Forex. Stocks and futures are highly regulated. And the reason being, let me see, is it on here? Okay. The reasoning it's highly regulated because Forex, or should I say futures and stocks, is basically because there's only one place you can purchase a certain uh, financial instrument. For example, in stocks, it's centralized. For example, stocks, where can you buy or purchase a share of a Jollibee stock? There's only one exchange, and that's the Philippine Stock Exchange. You can't purchase Jollibee stock in the New York Stock Exchange, right? And vice versa. Where can you buy Amazon shares? You can't buy it in the Philippine Stock Exchange. You can only purchase it in the New York Stock Exchange. Same thing with futures. Where can you trade futures? Nowhere else besides and only in the CME, the Chicago Mercantile Exchange, and that's it. Nowhere else. Nowhere else. Um, in Forex, it's what they call is decentralized, meaning you can purchase the currency anywhere in the world. In fact, there's 5 different markets. You have the Australian market, you have the Asian market, you have the Euro market, you have the London market, you have the US market. Each market has specific different prices. They're not regulated, right? Because they're decentralized. They're big things that they're decentralized, but at the same time, that decentralization gives you what? No regulation. Even though they say they are regulated, but no, each broker can manipulate each of the prices. That's the only thing. That's the difference between Forex and futures. In futures, it's only centralized. It's a centralized exchange, therefore they're regulated. right? There's no manipulation of prices. I mean, not as much as what's going on in Forex, but there is some market manipulation, but not in terms of price. Let me see. There here in the Philippine Stock Exchange, the disadvantage is the low volatility, meaning they're not as volatile as the stocks in the US. Here in the Philippines, that's why you don't trade it, you invest in the stock market here in the Philippines, because you incur your, or should I say, you realize your profits within how many years, right? So that's more due to the low volatility and low volume in the Philippine Stock Exchange. Disadvantage is the high risk due to high leverage. Yeah, since the leverage for what we trade is 50 to 1, there's high leverage is a double-edged sword. You can make money, a lot of money, using that high leverage, and also you can lose as much money as well. That's why it's a double-edged sword, right? Because the high leverage, you have higher risk than stocks. Stocks, the leverage is basically 1 to 1. So every $1 you make in stocks is basically $1 in profit, right? So it's 1 to 1. There's high competition, meaning you're competing against not only against other retail traders, but you're also competing against institutional traders, the banks, the hedge funds, and so forth. Government intervention, that's highly likely in Forex. For example, a government, without you being notified, they can devalue their currency, right? For example, a friend of mine who was trading, his specialty was trading on the Swiss franc. He was making money at a particular trade. He went to bed overnight, and guess what? The Swiss government devalued their currency. He lost all that money that he basically invested in his trading account, which is more than $100,000. Because out of nowhere, he had a position that was open, no stop loss whatsoever. The Swiss government decided to devalue the Swiss franc, and he basically lost all his money. That's what we mean by government intervention. There's no price transparency. Like I told you, I showed you in the dome, right? Again, the dome is the depth of market. I showed you in the depth of market the number of buyers and the number of sellers. You see that? That's being transparent. Where in Forex, you don't see that. You only see the price. You don't see the number of buyers and sellers of a particular price. So that's why it's not transparent. So what is the congressive system that we trade? The congressive systems basically again, we use tick charts. It's much better because you have more opportunities to enter a trade, and as compared to your normal, what we call the normal candlestick charts, where a lot of traders use for Forex and as well as stocks. Ticks cannot be used on Forex because, again, there's no real volume that's going on there, because the ticks is basically, like I said, it's based on volume. And if you talk to some of the ones who are trading Forex right now, you ask them what the volume is, they wouldn't know. They're just basing it on price. So that's that's the difference between candlestick, or that's the difference between Forex and futures, right? So anyways, in congressive system, we use a tick chart, right? Transaction-based charts give us more opportunities to enter trades when there is low volatility, and also much more opportunities when there is high volatility. This past few months already, since the trade war is going on, now the coronavirus that's going on, the U.S. market has been in high volatility. In fact, I'm making more money now easily because of the high volatility. In fact, some of my students, they're not used to this volatility. They don't know how to trade, but we have a system how to trade with this high volatility. Again, like I said before, we make more money when the market is going down because of fear. We make more money. And also with our system, we can have more wrong trades, or should I say, we have more losing trades and still make money. In fact, when was that? Just last week, I had a winning trade of what, 40%, but I still was very profitable. And because the reason being, I'll explain to you why that happens. So we can be wrong more times, and we still make profits. So the Congresso system, this is what we do. We look at the market in a more simpler manner. It's more base. It's a lot simple. We focus on the discipline and psychology rather than the technical analysis. Yes, the technical analysis is there, but to be a successful trader, 90% is psychology and discipline, right? 10% is technical analysis. If you can basically control your mind, because you basically, when you're a trader, who are you competing with? Yourself. Psychology is either you're too scared to lose money, or once you make money that easily, you become greedy. And that's why you have to disconnect your emotions from money, which is hard to do. It's easier said than done, correct? But you have to master that as part of the discipline process. A very disciplined trader translates to a very successful trader. A very disciplined trader translates to a very successful trader. With the Congresso system, our historical win rate is around 72.43%. Our risk management is basically we risk $50 to make $100. Therefore, the reward to risk ratio is a minimum of 2 to 1. I got in a trade where I made, let's say I had a risk of $50 and I made over $300, right? That was at least that was at 6 to 1 ratio, right? So the minimum is at least 2 to 1 with a Congresso system. So how do we day trade, or how do we day trade and make money on the Congresso system? So here's a particular trade that I did. It only took maybe 4 minutes, but I made, here again, I'm trading 3 contracts because I have a bigger account. I made $342 in 4 minutes. So let's see if we can do this here. Here we are. Okay, so it says here. Conference will now be recorded. Let me get here to the advanced statement or any verbiage trades currently in a trade. Okay, right here. Trades currently in a trade. So you can see here, when I said currently in a trade, what's going on here is basically I put a pending order here because I'm speculating that price. You see, if you look at this chart, where is the trend? You don't have to be a genius. You can see the price going down, correct? So when price is going down or the trend is down, what do? You sell. When the trend is going up, you buy. There's an adage of what we call it, the trend is your friend, right? So I was speculating, since I see that the trend is down, therefore I'm speculating to sell at this particular price where I speculate it's going to hit. So I put a pending order, meaning unfilled order, until the price hits my pending order and then gets filled. Once it gets filled, our software automatically plots a stop loss, meaning once it hits this, you're out of the trade at a loss, but at least you're a managed loss. That's your stop loss. These green bars here, as you can see, since I'm trading 3 contracts, I have 3 different target profits, or profit targets, I should say. There's one profit target right here, which is 8 ticks, which is $100 if you're trading 1 contract. Most of our beginning students start off with 1 contract. So therefore, once it hits here, you make $100. For me, I'm trading 3 contracts since I have a larger account. But let's say here, if it hits right here, excuse me, if it hits right here, that's already $100. Okay. So let's go on with this trade. I'll try to manage this. So here's the market open now. So I moved my one contract here to two contracts now. It's 8 ticks away. So when I hit this, that'd be $100 per one contract, right? Per contract, I should say. So since I have two contracts there, if it hits there, it's going to be $200. So my risk here is $50. So now, so what I did here now, I'm going to move my risk from $50 down to one tick, or $12.50. So now my risk is $12.50 to make, at this particular point, 200 right here for me, $200, since I have two contracts there, and another 150 here, $350. I'm risking $12.50 to make $350. Protect my risk. So usually these webinars are usually 1 hour. There we are. Let's see. So there, that's $350 right there. You can see here, I'm gonna fast forward this. There. I know you can read that, but it's 350. And three contracts is one trade. So that's one trade, $350. And then less than 4 minutes, less than 5 minutes, less than 15 minutes. Now, if you can do that consistently like that, just for one contract, that's basically $100 in 4 minutes. There's the potential of doing that. Okay. So like I said, to be a successful trader, 90% is psychology, 10% is basically technical analysis. So we also work on developing your psychology or your trader mindset. For example, we always tell our traders, never let your emotions rule your decision while trading the futures market. What are the emotions? The two well-known emotions are what? Fear and greed, right? Greed is when, if you can make that, like I showed in my trade I just showed you, if you can make that much money, $100, let's say, for one contract in 4 minutes, your human nature is going to say, well, if I can do that in 4 minutes, what makes you think I can make more and more money if I continue trading for another 30 minutes? Meaning I can make $1,000, right? That's your greed kicking in. An example of fear is, let's say our system tells you to enter a trade. You enter the trade, then you end up losing not one trade, but two trades in a row. And then a third trade, it's giving you a signal to enter another trade. But since you fear that you lost your two consecutive trades, you won't enter this high probability trade setup. So you don't enter it because you fear you're going to lose again. What happens? So when the trade that you didn't take ends up winning, then you start kicking yourself in the butt. I said, why didn't I take that trade? See, that's what it is. That's fear, the fear of losing money. And that boils down to your connection, your emotional connection to money. I always tell people, try to disconnect your emotion to money. It's about making consistent decisions in terms of entering a trade. Consistency leads to more money. It's not the other way around where you look at how much money I can make. It's like how consistent you can make, how consistent, say how consistent in the consistency of making uh, good decisions in entering a trade. For example, there's a high probability trade, take it. Don't fear it's going to lose. You know what? Losing is part of trading. There is always going to be losing. You'll never have a perfect 100%, right? Because if you do, then you're just you're being bamboozled. Because losing is part of trading. The key is to manage or minimize your losses. To manage your losses, that's the key. It's never trying to avoid loss, because losses are part of trading. So again, like I said here, a disciplined trader is basically, you may know all those strategies, you know the knowledge and everything. Yeah, well, you're great at technical analysis, but the thing is, what trumps all that is your psychology. You have to be disciplined, right? You have to disconnect your emotions from money, the fear of losing money, and the greed of trying to make more money. We always teach our traders, you have to have a plan to trade. I mean, a trading plan. If you don't plan the trading, if you don't trade the trading plan, then you fail to, basically it leads to failure, because you just continue going. It's like going to a casino and just saying, okay, if you have no, let's say, if you enter a casino and say I plan to make let's say $500, you go in a casino and you make more than that. Once you hit $500, what, you're gonna continue? No, I'd probably just say, okay, I'm done. I made my goal. Same thing with trading. You have a daily goal of how much you want to make. Once you hit that goal, you quit. You don't continue. That's the psychology. Okay. So why are we not financially successful? Why are people looking for supplemental incomes? Well, first of all, people are basically making other people rich, their employers rich. Employers value their value. Well, basically, this is what it is. We end up working for we're employees. We've settled to become employees, right? Because you know what, most of employers would see how much, like I said from the beginning, what's more important, skills, right? So they value you as an employee as the now of what you can bring to them in terms of skills, right? They undervalue you. You have more worth to yourself than you do, or you should say, you are more valuable than what employers may think, that what they think of you as your value to them. Because why? They would underpay you, even though you're valuable with all those, so they can make profit. That's why we're not financially successful. You may be underpaid. Most of you are underpaid, right? That's the reason why, because you've settled to become employees, where you make more money being your own boss. So here, this is your short list. This is where the dream is. It's about becoming wealthy, travel the world in style, build my dream house, and retire early at the age of 25. No, but at least retire early, right? So that's our dream. But in reality, this is what we do. We pay bills, go to work. Our work schedule ranges between 12 to 15 hours. Again, that's just work. It does not include your commuting time. So you may be looking between 15 to 18 hours, right? You go eat. By that time you're tired, you sleep. You repeat this whole process. You repeat this whole process over and over again. Just keeps on going and going for how many years? But like I said, people are settled in that. I think they're happy with that, right? Because you have to know what you're worth, right? So rather than settling for that, how can I create my own success? That's why a lot of people try to do an online business or do their own businesses, right? Because the only way you can make your own money or be financially independent is basically having your own business. So how can I create my own success?
Fail big. That's right. Fail big. You only live once, so do what you feel passionate about. Take chances professionally. Don't be afraid to fail. There's an old IQ test, was 9 dots, and you had to draw 5 lines with a pencil within these 9 dots without lifting the pencil. The only way to do it was to go outside the box. So don't be afraid to go outside the box. Don't be afraid to think outside the box. Don't be afraid to fail big, to dream big. But remember, dreams without goals are just dreams, and they ultimately fuel disappointment. So have dreams, but have goals. Life goals, yearly goals, monthly goals, daily goals. I try to give myself a goal every day. And understand that to achieve these goals, you must apply discipline and consistency. You have to work at it every day. You have to plan every day. You've heard the saying, we don't plan to fail, we fail to plan. Hard work works. Working really hard is what successful people do. And in this text, tweet, twerk world that you've grown up in, remember, just because you're doing a lot more doesn't mean you're getting a lot more done. Remember that. Just because you're doing a lot more doesn't mean you're getting a lot more done. Don't confuse movement with progress. My mother told me, she said, yeah, because you can run in place all the time and never get anywhere. So continue to strive, continue to have goals, continue to progress. And anything you want good, you can have. So claim it. Work hard to get it. When you get it, reach back. Pull someone else up. Each one, teach one. Don't just aspire to make a living. Aspire to make a difference.
You guys know Denzel Washington. He's one of my favorite actors. Well, anyways, he's a very motivational speaker as well. He came up with this quote. He said, "Don't be afraid to fail big, to dream big. But remember, dreams without goals are just dreams. And that's it. They ultimately fuel disappointment." So have dreams, but have goals as well. Life goals, yearly goals, monthly goals, daily goals. In fact, those are the goals that we set ourselves as traders. What is my daily goal? How much money should I make? And to achieve these goals, you must apply discipline and consistency. And that's what a good trader is, who is one who is consistent as well as disciplined. You have to work at it every day. You have to plan it every day. You've heard the saying, we don't plan to fail, we fail to plan. So the question is, what is your goal? What is your goal? I know you guys have goals. You should put it down on paper. Rather than just stating a goal, you have to do it. Rather than talk the talk, you also have to walk the talk, right? Can't just put down a goal and not do it. Like Denzel says, goals are just dreams without goals are just dreams, and that's it. So what is your goal? Is it to really find supplemental income? Do you want to be financially independent, or is it just the freedom? For me, it's not being about rich. It's being the freedom of doing what I want to do, or I have to report to a boss. Just basically the freedom. It doesn't have to be financially free. Well, the freedom becomes financially free, but I'm not looking to make $100 million. I'm just happy to be where I don't have to be worrying about money, That's what it is. The freedom to do anything I want. That's what I want. So here's what Marcello, and I agree to this, what Marcello says. Trading full-time, this is about trading. Trading full-time is not for everyone, but it's good to know how it works on a practical term. I believe everybody can learn to trade, but not everyone has the discipline or patience. That's the number one thing, discipline and patience to learn. That's why I always tell my students, if you like this, if you are serious about pursuing this, then be persistent, be patient. Because the thing is, this is learning a new skill. This new skill you can't acquire in 3 days or 1 month or 3 months. Well, yeah, you can basically. The Jim I told you, the 61-year-old, he learned it in 6 weeks. But again, each individual has their own learning curve, right? For me, it took me close to a little over a year to learn this system because I had other systems in my head. So therefore, with the experience, for me, teaching a new student is a lot better because they learn, they can absorb the new system. Whereas experienced traders, they have a lot other systems that's cluttered in their mind. So we have to basically declutter their mind to learn this new system. Whereas newbies or novice traders, they have nothing in their mind. So basically, it's a clean slate, and we can basically mold that mind, right? So that's why. Like I said, we have got students, and most of them or some of them have quit because they thought it was easy, or they believe the marketing where people make this much of money and they drive a Lamborghini, they have a big mansion, but in reality, it's not that. It's basically the discipline and the patience to learn. So there are no secrets. You either learn by working hard and practicing, or you don't. There are no shortcuts, just like life. It's like just like acquiring a new skill when you go to school, get a college degree, the same thing. A surgeon cannot be a surgeon within 3 days. It takes them at least 10 years, or let's say 10 years to go through med school, right? And another, how many more years to specialize? So there are no shortcuts. Again, trading is a skill that you acquire. It's not something you just pick it up on and you do it in 3 days. Not like that. So most trading academies make you believe that buying a course, you will soon become a professional trader and earn a lot of money. Be careful, it's not that easy. And that's what we always tell our students. If you do it well, if you really put time and effort in it, you'll be able to learn how to trade and might be profitable. If you do it well, you can earn a lot of money again and make a living out of trading. But if it were that simple, everybody would be doing it. Yes, once you become a successful trader, what you learn is very life changing. It is. It is a life changing skill. And whatever you learn, no one can take away from you. That's the big thing. Once you become successful, in my opinion, you can make a lot of money with day trading, but only if you really focus and are ready. Most people are not willing to really challenge themselves and take control of their emotions. Although we don't hear a lot about failures, a lot of people do lose a lot of money, myself included, as well as me myself. I lost more than $50,000. That's basically my education there. So my aim is to always be transparent with you, and I always try to share as much as possible for you to understand the reality of the trading world and of a trader's life. Again, when I first started trading, I lost a lot of money, and basically that's my education. And for me, I always tell my students, I don't want you, the students, to lose that money either. So that's why we always tell them we do demo trades. We evaluate how they do the trading, and if they're consistent enough, then we tell them, okay, you're ready to start trading a live account. But a lot of our students want to right away start trading a live account because they think it's that simple to make money. It's not. Trading is a journey, a personal journey, because you become disciplined. Discipline is the number one thing, right? To be a trader, you have to be disciplined, because if you're not, you might as well go to the casino and just gamble your money away. Same thing. That's gonna be the same thing. So anyways, how do I start trading futures? Well, you can either enroll in our gold masterclass. A Gold Master Class, what is it? So a Gold Master Class is basically a 6-week live online course program. It's taught online. There's 1 month. Let me get this out of the way. There's a 1 month trader support after the 6-week live online course. There's a 1 month trader support after the 6-week course, and you also get one-on-one coaching session with either trader coach Jerry or Echo or myself. And you also get the legacy trade setups. So those are the setups that we do, that how we trade, that consistently work if you know how to follow the rules of how to enter a trade. We also provide the technical support and indicators for life, and also you have lifetime access to the curriculum. Okay. And also with the Gold Master platform, this is how it's run. The first 3 weeks, the week 1 and week 3, you learn the basics of the Congresso system by doing the exercises. It's basically from chapters 1 through 11. You learn how to read the tick chart. And what else? In weeks 4 through 6, you'll learn the trade setups that we use. That's from chapters 12 to 19. You start practicing on a demo account on the trade setups, how you enter your trades and so forth on a demo account, and you start creating new habits, right? That's how the process of becoming a disciplined trader. Then the last day of week 6, this is where we trade the live market. Then we evaluate how you enter your trades to make sure that you are entering correctly and so forth. So that's basically the 6-week program, Gold Masterclass program. Now, here are the former students. They've graduated, right? So here we had our batch 1. This was back in, I believe, July of last year. Batch 1, you see this guy circled there. His name is John Longa. He graduated. Our first batch was July 30th, 2019. His profession was a seafarer. He basically works on a ship, on a boat, right? So the reason he came to us is because he was sick and tired of being sick and tired. He had a family here. He wanted to be with his family. He just got tired of being out in the ocean, right? So he had no trading experience whatsoever. Here's his chart, his demo account, okay? His demo account, basically, in this particular trade, this is when we were doing the live market on that last day, right? So he took 1, 2, 3, 4, 5, 6 trades, and of which he won 4 and lost 2. Again, when he first started out, he didn't know what this chart was about. To him, it was like an EKG graph or EKG chart when he took his physical, right? But anyways, he knew at the end of the 3 days, or at the end of the Gold Masterclass, he was able to know where to enter the trades, right? He knew where to buy, he knew where to sell, and so forth. This particular one, that was 30 minutes, less than 1 hour. He made $275 on one contract only. $275. How would you like to do that in less than 1 hour? Again, that was demo. Same batch. His classmate here, Mon Batung or Batung. He's a professional speaker and financial trainer. He basically trains salespeople who sell mutual funds and life insurance. He's an experienced trader, but he's an experienced trader of Forex. He came to us because he was inconsistent in Forex, like everyone else. And so he basically started a live account, and his first live account, basically, what did he do here? Took one trade. You see the entry right there, 16 ticks, one contract. It took less than 15 minutes. He made $200. Again, 16 ticks times $12.50 is $200. That's one trade. But he's disciplined, since he knows he's an experienced trader. So once he got his profit goal, he quit. The next day he did the same thing, but this time he made $135. But he was being consistent in terms of, okay, $200 is fine with me. It reached my profit goal. I tell my students, if you make $100 on one contract per day, quit. Because the longer you stay in the market, the higher the probability of losing that money or losing more money and giving back the amount that you made. That's what it is. Just like in the casino, the longer you stay in a casino, it's not, it's not that you'll be making more money. Most likely you'll be losing more money. Correct? Same thing in the market. The longer you stay in the market, the higher probability that you will give the money back to the market. Here's a batch 2, which was in August of last year. You can see we got more students. And I'd like to highlight this woman right here, right there. Her name's Armida Parcon. She was a registered nurse with the Department of Health. And basically, she was sick and tired of her long hours. Her last assignment was in Marawi. She was treating the injured people there at the war in Marawi. She worked long hours but had very minimal pay. So she took our class, trying to look for a career change. No experience in trading whatsoever. Here she is in our office. She's basically, I'm going to be evaluating. I was evaluating her trades. She took her trades without me coaching her, but she learned what she learned in our class, right? So these are her trades right here, as you can see. So when she got done trading, I merely evaluated it. So she took 5 trades. She knew where to sell. She knew where to enter, and she made 22 ticks on one contract again, trading only one contract in less than 30 minutes. Again, she made $275. Now Armida, I'm her coach. She's close to funding a live account. She'll be trading soon with a live account. In fact, I just talked to her last week. So she'll soon be funding a live account. She's that consistent now in her demo. And here's another guy, another student. This is from batch 2. His name is Mod. He's from Kuala Lumpur in Malaysia. He basically was following my blog on Facebook, and he was following for 1 year, and he was really contemplating on attending a DTA class in the US. But since he heard that it was now here in the Philippines, he flew out from Kuala Lumpur just to attend our Gold Master class. He states here, keep up on doing this. It's really hard to find this kind of classes, especially in Asia. I waited for 1 year for the class to come here. And now he is basically a experienced trader in futures, but he traded, what's it called? Crude oil. And being crude oil, I've traded crude oil before. It's very erratic. It's hard to make money in crude oil unless you know what you're doing. So he was very inconsistent in making money in crude oil. So now he found out about ES. He's doing a lot better. In fact, I think he's already trading a live account last time I talked to him. Batch 3, which is in September of last year. See, we're getting bigger, and guess who came by? Marcello himself. He wanted to see how the students were doing. So basically, that's him. And you see this guy next to him right here, this guy right here. He's our youngest trader. His name is Renzo. He's 13 years old. His dad brought him to this class because he found Forex too confusing. When he found out what futures was about, he said, I think I can relate to futures a lot better. So his dad, as you can see here, Noel, he is a full-time trader of Forex, right? And basically, he took his son, Renzel, and Renzel is doing pretty good. In fact, Renzel, what he does is basically he's an online gamer. So his dad was saying, instead of just wasting your time being online playing those games, why don't you do something online where you can make money? So he is now one of our youngest traders. In fact, I think he's going to be funded pretty soon. His dad's going to fund him a live account. Here's Marcello interviewing him for Marcello's Instagram account. Marcello is well known in Latin America. So basically, Marcello's interviewing him for his Latin American market. Since Renzo is the youngest trader, will be the youngest trader in all of DTA. Okay. Here is batch 4, which is in October of last year. You can see we have Jack. He is an options trader in the U.S. He's based out of Subic Bay. He came all the way to Manila to take the class. And this is Al right here. He is a forex trader. He took another class, another course, and he took that. It's a 1-year course. So what he learned in that 1 year, what we taught him in 6 weeks. In this particular, we were offering a 3-day course, right? 3 days. What he learned in 3 days, he learned more than what he paid for that 1-year course. That's what he told us. In fact, he's been doing good with his trades. He'd be funding his own account once he gets enough money to basically trade his own money. Batch 5, again. Now the big thing here, you can see Jack there. What he did here was there were some areas that he didn't understand, so he basically sat in one of our classes the last day. This right here, his name is Mark. He is a fund trader for Cole Financial. He sat in one of my classes. He was impressed at what we were teaching, that he said, you know what, I need to take this class. And basically that's what he did. He took the class, it opened his eyes, and now last time I talked to him, in fact, I'm his coach. He was in Singapore last time I talked to him. I guess he's here now. But last time I looked at his trades, he's doing pretty good. I think he's just waiting to get funded there as well. But he's a fund trader. He basically trades for a lot of high equity clients that he has for Cole Financial. And as you know, stocks are down right now in the future in the Philippine Stock Exchange. So therefore, he asked me if he can hedge against those losses with futures. And I said, yeah, most definitely. So that's why he decided to take the class, and he was impressed. It opened his eyes to a new market, I should say. So that's batch 5. Here's batch 6. This is in Davao. In batch 6, this was, I think, November. You'll see a guy here. His name is Philip. We did it, the last day we do demo trades on a live market. So basically, on that demo trades on that live market, he made more money than I did. So that's why I had to take a picture with him. Basically, he was actually pretty good. He has a live account now. He learned the system in less than 6 months. He learned it in, I'd say, 2 months at the most. I think 2 to 3 months. But he has a live account now. His name is Philip from Davao. This is in Cebu. That was batch. That was in Cebu. This is batch 7. This was just recently. This was in. I'm trying to think here. January, end of January. This is in Makati. And this is batch 8. This is in Baguio. This was in March. No, I'm sorry. This is in Clark. This was in beginning of March. I think this is more in February. This is Gold Masterclass right there. And the most recent one is in Baguio. This is before the quarantine. This was in March, the first week of March. This was in Baguio. So, like Marcello, a great trader is one that helps other traders be better than him. And like I said, my ultimate goal is to teach everyone where you can earn a consistent income being a consistent trader. It's not about how much money you can make, it's being consistent. If you can be consistent at making $50 a day, would you be okay with that? If you can do that consistently, because $50 leads to what? $100, $150, and so forth. The bigger you build your account, the more money you'll be making. So if you can consistently make $50 a day, we teach you how to do that. That make you happy. And this is going to be treated as like an online business. It's going to be day trading is going to be a business, and that's what it is. You can trade it anywhere in the world. Not only here in the Philippines, you can be in vacation, be trading, just like Marcello did, right? So, like I said, if you're interested in learning more and diving into the world of day trading, click on the link that's attached to this webinar, and you get to learn what you get to learn through the Gold Masterclass. And I'm only asking for people who are serious. It's not about learning or learning to earn. There's a potential you can earn within, like Philip. He's basically trading a live account right now, and it took him, 3 months at the most. But again, I'm not guaranteeing that you'll learn in 3 months. It really depends on each individual. Philip was very disciplined. He was persistent in learning, right? It's not going to come easy. Like I said, trading is a journey, and that's what it is. Okay? Thank you again for your time. I know this kind of was lengthy, but again, thank you for your time. And like I said, if you're interested in pursuing this, go right ahead and click on the link that's attached to this webinar. Hope to see you on the other side. Take care, God bless, and be safe. Bye-bye.
I started with DTA and futures because I was inconsistent with my Forex trading, and I've been trading Forex for on and off 10 years. And when I learned about futures and the benefits of this market, the less risk and a better structure and better setup, I tried to learn futures from one of Marcello's students. And when I learned that Marcello is bringing DTA in the Philippines, I decided to sign up to his class.
I learned about DTA in the internet, and I was lucky enough to meet Marcello in person and Dominic, who is our Filipino mentor. Since I'm nearing my retirement, I'm planning to trade after I retire with futures. And I really hope that since I just started about 3 months ago, I think I'm doing quite well as what Dominic told me. And I'm looking forward to improving my trading.
I chose DTA because of my teacher. He was also a graduate of DTA, and he highly recommended this DTA system. Also for futures, since I wasn't doing too well in Forex, so I tried out futures and it seems a lot better.
So the program is designed to make sure that students can learn on their own time, on their own way. I work full-time, and so the module provided me enough time to learn it slowly but meticulously. Dominic, my mentor, my coach, is giving me a lot of advice about what I do wrong, what I do right, and they are very consistent with the advice that they are giving us.
I really like the one-on-one coaching. The best way really to learn is to be with a mentor who knows what he's doing. And I really think that the DTA staff headed by Marcello is doing a great job of doing a mentorship with us.
I would recommend DTA, especially to those who have not had any luck trading other systems and other classes.